I got to zero in on China first. How bad is it?
Well, we've seen a couple of macro indicators really collapsing in the last 2 months of the quarter, actually, November, December. Consumption tax, VAT tax, all these were down dramatically. Let's not forget that Apple was up 16% into Q3, calendar Q3 last year. So we went from going up to down 17% or so year on year. So there was a dramatic collapse in China, and it's not just Apple feeling the brunt of it. What we're seeing potentially is a collapse in the consumer confidence overall.
So, Dan, the question then is why? Is it just because of these taxes? Is it because of broader sentiment across the country? Does it have anything to do with the trade war? What is the root of this?
Yeah, I mean, look, we continue to think 80% of this is Apple specific to a mispriced 10R phone that ultimately we believe should be 15 to 20% cheaper. I think a lot of that has been a mispriced phone in terms of also from a technology perspective. You look at the camera technology, Chinese consumers, which represent, in our opinion, based on our estimates, 20% of all of the upgrades for iPhones over the next 12 to 18 months. It's a key region. They basically looked at this phone and kind of walked away. And that's where you see with these numbers, look, we knew China was going to be weak, but really fell off a cliff. The positives, obviously.
So hang on, Dan. Yeah. You're saying that the vast majority of this $5 billion is simply due to the mispricing of the 10R? What about all the other phones?
Well, 10R is all focused on China. You take a step back. I mean, this is really was Cook and Apple's focus in China was 10R. And if you look at the pricing of the phone, combined, we continue to think 80% Apple specific, 20% macro, Huawei backlash, and just overall headwinds. But a lot of it is a mispriced phone given the technology. And this is a huge iPhone cycle given 20% of all overall iPhone upgrades are in China. That's the key. And that's why in this call coming up is going to be key to how this turns around, as well as on the pricing strategy, how Cook and Apple are looking at it.
We know that there are, Horace, competing smartphone makers, Huawei, Oppo, Vivo, Xiaomi, all who make cheaper smartphones, phones that are much cheaper than the iPhone. But what do you attribute this to?
First of all, just to address this last comment, the entire sector in China fell, the phone sector fell about the same rate that Apple did. We had also Samsung reporting huge losses there in market share. We do have some of the Chinese players rising in terms of market share, but the overall market is suffering. It's not just Apple.
So why are some rising but Apple not?
Well, Apple does have the premium segment, so the premium you would imagine would be suffering more. But again, the overall market fell. So I think Apple is more or less in the middle of an overall contraction in the market.
When you look at iPhone sales in other regions, we saw U.S. sales overall slightly up year over year. Sales in Europe slightly down. So, Dan, where is the growth going to come from if it's definitely not coming from China?
Yeah, I mean, look, China is the linchpin, but fundamentally, you don't need to see mega growth here. I mean, it's basically, you're looking for plus or minus 5% type of growth, give or take. And I think right now, if you look, you just want to see a stable install base where ultimately we believe 350 million iPhones are coming up for an upgrade over the next 12 to 18 months. The fear and what's weighed on the stock is the install base. If that ticks down, that's fundamental to the services story. So we believe you start to see a China rebound, but the only way you see that is if they do cut prices more with 10R. And that's going to be the focus in the call, because otherwise it would be a lost iPhone cycle till September. And that's the worry of the bears and the bulls. And that's kind of the debate here. Do they cut prices? And do they take the medicine from a pricing perspective?
The call is underway. Tim Cook has just started speaking. He's saying that the macroeconomic conditions were actually much worse than the company initially thought they would be. Horace, they didn't break out unit sales for the very first time, but they did give us revenue for each product category: $52 billion for the iPhone, $6.7 billion for the iPad, $7.3 billion for wearables, home, accessories, $10 billion for services, generally in line with the way that the pie normally looks. What do you think the significance is of these numbers not having those unit sales for the first time?
Well, first I want to address one thing. The installed base there was an update given during the investor letter, and it's up 100 million over the last time that they gave an update, which means it's a 1.4 billion installed base right now in terms of devices.
900 million of those are iPhones.
That's an estimate, yes. We do have, as you cited, some of those figures in terms of their breakdown by units or breakdown by revenue by category. We have the iPad up 17%. We have the Mac up 9%. We have wearables and other growing at 33%. Just the wearables segment up 50%, which was given earlier. So, in fact, excluding the iPhone, the business is growing at 19%, which is still a smaller portion than the iPhone, but that's growing very well. So I think that overall, I think this is a healthy ecosystem. This is a healthy number of users. This is a growing number of users, and we have a great services story on top of that.
So reports of Apple's demise are greatly exaggerated. Is that what you're saying?
They have been for many, many years, 10 years, as long as I've been following the company.
Dan, would you agree?
I'd actually disagree with that comment in the fact that, right now, if you look at this, the story has changed, and the focus is on the install base side. So when you look at services and what's going to happen on the install base going forward, it's key to what's going to happen in the next 12 to 18 months. And China's a linchpin there if those customers do not upgrade. So I do think, as someone that's been long-term bull and continues to be on Apple, they are entering a different type of white knuckle period than they have before. So I don't think you could compare the two, and I think that's why investor reaction has been I think so negative. I think what you want to see here going forward is that the pricing hubris they're going to lose in China, and fundamentally the services business you'll feel more and more comfortable with. That's why what I think the biggest number here, the thing that all investors are focused on, it's the services gross margin above 60%. That's the line in the sand. That, in our opinion, why the stock's up. That's the first time they're breaking that out. That's key to the sum of the parts valuation for the services business.
Horace.
Margins are up on services. So during the year-ago quarter, when we had a greater story, a better story for Apple, they were 58%. Now we're 64%. The story on margins is not a bad one at all, and I think we're going to see increase there as well going forward. To me, the key question on installed base is that in order for that to decline, we would have to have people switching out of Apple product. We're not seeing that. If deferrals are happening, that means they're staying still within the audience of Apple. So I think that's yes, we should keep an eye on it, but I'm not sure that loyalty is going in any other direction than up.